Hey everybody, Jeff Williams with Armor Insurance Agency located right here in Miles City, Montana. Today we are talking about renter's insurance. And in Miles City, there's almost 1,300 renter-occupied housing units. And every single one of them needs protection from an unexpected event. Unexpected events like theft, fire, liability claims, just to name a few. Now, there's a common misconception out there, and that misconception is that a landlord's policy is going to pay for a renter's stuff, and that is just not true. That is why each renter needs their own policy to cover their own stuff. So if you're ready, let's get started. So what is renter's insurance? Well, it's a specialized insurance policy that covers people who are renting their living space. And it doesn't matter if you're renting an apartment, a house, a condo, or any other kind of dwelling. As long as you're renting and you live there, a renter's insurance policy is appropriate. So what kind of coverage do you get out of this? Well, there are 4 coverages that are typically offered in a renter's insurance policy. Property coverage, liability coverage, medical payments coverage, and additional living expenses. We are going to cover all 4 of those coverages in this video. So here we go. What is this property coverage? Well, it means your stuff. If you take where you live, you flip it over, and everything that falls down, that's your stuff. Could be furniture, could be electronics, could be clothing. And what this coverage does is help either repair or replace your stuff. Your loss doesn't have to happen just at the place you live. It can happen away from where you live. And if it does, and it's a covered loss, then it's paid for. Now, this is the only one of the 4 coverage that typically will have a deductible. Now, and there are also some things that the coverage is just not going to cover. It's not going to cover your day-to-day wear and tear. It's not going to cover earthquake. It's not going to cover flood. And it's not going to cover losses above your limits. So you'll want to consider where you want your limits. The next coverage is liability coverage. And liability coverage is what pays the other guy. So if you injure someone and they find you liable for it, or if you're found liable for the actions of someone like a child, then you can be held liable. And if you're liable, you're going to have to pay the other guy. Now, it can occur on your premises or it could occur off your premises. Either way, you tend to be covered with this type of policy or type of coverage. So this protects your finances, because generally when we're talking about liability, we might just be talking about court costs. And typically the liability coverage is going to include court costs. Now, you're going to have to look at your policy, because some policies will say we have one pot of money and that pot pays for court costs and for your losses. Alternatively, you'll have other policies that might say, okay, we have this pot of money and it's for losses. And in addition to those losses, we pay court costs. It's very important to look and know what is in your policy. Usually that pot has a minimum amount attached to it, and that minimum amount is typically about $100,000. It's recommended to have more than that, generally recommended around $300,000, but you can get more as you need it. The coverage typically will not have coverage for specific things like intentional acts. So if you hit somebody with a pipe or with your fist, you did it intentionally. It's not going to pay for that. If you have a business-related claim, not going to pay for that. If you have certain dog breeds, like maybe a chow chow or maybe a pit bull, there are some that are excluded, and you'll have to know about that before you get your policy. And if you have an exotic pet, they almost always are going to exclude that. And that's going to be something like, a boa constrictor. And if it gets out and kills a neighbor's dog, not going to pay for it. The third coverage is medical payment coverage, or MedPay. And MedPay is meant for your guests. When you have a guest in your rental and something happens, like someone falls down the stairs. If they fall down the stairs and you have to call an ambulance and they take them to the emergency room, this is going to kick in and pay some of those costs. The idea being that nobody has to be at fault for this. There is no liable. You aren't necessarily liable for what happened, but it's kicking in and it's covering this to help out. And what the insurance companies understand is that when you make a good faith effort to try and help somebody out when something bad has happened, it does decrease the number of lawsuits. This is not meant for you or your family members. And if you intentionally cause an injury to someone, it's not going to pay. So the final coverage is additional living expenses, or ALE. This coverage pays for temporary living costs if your rental becomes uninhabitable due to a covered loss. It's going to help you maintain your standard of living. It'll pay for things like your hotel bill, increased cost of food, pet boarding costs, or storage costs. Now, you're going to need to keep good documentation, meaning you're going to need to have all your receipts, because you're going to have to present those receipts to the insurance company as proof of what the cost was. There are some things that it is not going to cover, though, and this is important. It's not going to cover your normal bills. So if you continue to have to pay a sewer and water charge, well, you're going to still have to pay that. This coverage is not going to take care of that. If you have a normal amount that you spend on groceries, what it's going to pay is the difference between what you used to spend and what you have to spend now. It is not going to pay for non-essential upgrades. So instead of a regular hotel room, you decide you want the penthouse suite, not going to pay for that. And if you develop a mental condition because of the loss, it's not going to pay for pain and suffering. So how much is this policy going to pay out? That's a really good question to ask. And if you look at it, and let's say you had a loss of everything you had and you went to the limits, well, it'll pay the limits. But if it doesn't go to the limits, you really need to know if your policy is paying out based on actual cash value or replacement cost. And there's a big difference between the two. Now, most of the policies are going to be actual cash value and then give you the option to choose replacement cost value. And if the replacement cost is chosen, it will have a higher premium. But here's the difference between the two. Actual cash value is the replacement cost minus depreciation. Now, to understand that, let's take an example. Let's say you bought a TV for $1,000 8 years ago. We're going to say the lifespan of that TV is 10 years. And it gets lost. It gets destroyed, damaged, can't use it, got to replace it. If you replace it and you want to do it in today's market, well, today's market, the same make or model or equivalent costs $3,000. And if it costs $3,000, the insurance company is going to look at it and say, well, it costs $3,000, but yours was 8 years old. So it depreciated, since it has a lifespan of 10 years, depreciated about $300 a year. And so you had about 2 more years, therefore it was only really worth about $600 for its market value. That's a big deal because you're not going to get your TV replaced. If, however, you chose replacement value, well, replacement value is just that. If it's $3,000 to replace, the insurance company is going to pay $3,000. Now your premium will be more, but you get your TV back. So what are these covered risks? I've mentioned it several times. Well, most of the policies are going to be what's called a named peril policy, which means that in the policy, there will be a section that specifically names the risks that are covered. In other words, if you have a loss, it has to be one of those ones that's covered. Alternatively, there can be an open peril policy, and an open peril policy means everything is covered unless it is specifically identified as being excluded from coverage. And there will always be certain exclusions. But when you look at the two, the one that is a named peril policy is generally going to be cheaper than the one that is an open peril. Most of the policies are going to be a named peril policy and then give you the option to have an open, or some of them might give you the option to have an open peril. Now, the perils that are covered under the named peril policy are generally going to be fire and smoke, theft, lightning, explosion, vandalism, falling objects, water damage from plumbing system, windstorm or hail, riot or civil commotion, or the weight of ice, snow, or sleet, meaning it collected on a roof, maybe the roof fell in apart or so and caused damage to your stuff. So those are typically the ones that are covered under a named peril policy. The exclusions that generally are going to apply to either one is going to include floods, war, negligence, normal wear and tear, earthquakes, or earth movement, something like a landslide or a sinkhole. What does one of these policies cost? And surprisingly, they're pretty affordable. The premium, or what you pay, is going to vary on multiple factors. So it's going to vary depending on the amount of coverage that you want, the deductible level that you want, the location where you are, your credit history, and your claims history. But even so, on average, nationally, this type of insurance typically costs somewhere between $12 to $20 a month, or $148 to $240 a year. But here in Montana, it's slightly lower and costs somewhere around $11 a month on average, or roughly $131 a year. Now remember, those are averages and they can change depending on the individual. But overall, that's very affordable. So here's why having renter's insurance is just a good choice. It protects your personal belongings against covered perils. It will protect your personal belongings on premises and off premises. It provides you with liability insurance. So if you hurt someone by accident on premises or off premises, you're covered. It can help pay temporary living expenses if your rental unit becomes uninhabitable for a covered reason. And it's really affordable. With policies costing on average between $11 to $20 a month, I mean, you can't really beat that kind of coverage. It should give you pretty good peace of mind that you know your assets are protected. Well, everyone, this concludes another one of our episodes. This time it was renter's insurance, and I hope you found something valuable. It was fun. I enjoyed doing it. I hope to see you again. Thank you very much for tuning in. We'll see you next time. Bye now.